Hey everyone, it's Terry here, and in this video, this is the week ending 8th of August 2026 and showing my ISA stocks and shares holdings. I've done the video separately on the three ETFs I call the concrete foundations. This video is on my other stocks and shares that I have in my stocks and shares ISA, and these are the ones I like to think of my fun uh, shares that I look forward to investing in. That I've known the companies for years. I look forward to the dividends. So without further ado, let's get straight into it. Just like to say, obviously, this is not financial advice being offered. This is just a recording of my personal journey with my own stocks and shares ISA. So, as you can see, my fun and dividends, although I love the ETFs and get fun and dividends out of them as well. But these, as I say, are companies I've known all my life. I say pretty much every video, and it's the truth. Companies like Sainsbury's and Tesco's and what BP, Shell, Legal and General, Aviva, that was Norwich Union, NatWest, HSBC. I'm going to look to build up HSBC. I think the price is around about £14 a share, I think, at the moment. Something like that, I'm not too sure. I think it's around about that 14, 15, just under £15. So I'll be looking to build that up. But again, HSBC was the Midland Bank, and obviously Hong Kong and Shanghai Banking Corporation now, hence HSBC. As you can see on the right-hand side, as you look at the screen, the two images on the right are last week's position, and the two images on the left are this week's position. And I've added some money. I think I've added £20, perhaps even 30 in some shares. I'm trying to build them all up, obviously, but I've got ones that I sort of say, I don't know, the correct phrasing is perhaps a little harder than others to build up. Legal in general, or particularly for some reason, and Aviva like that. I think it's because they've got good dividend yields. So I'm building those up pretty good. Legal in general, trying to hit, and I may have done the 100 shares mark, which will be the first one where I've owned 100 shares of a particular company. And I think I'm either there or thereabouts. I'm pretty sure I'm there. And then I shall try and do that with the others. Some are easier to build than others because some obviously are a pound, well, say £2 a share, and some are £40 a share. So obviously it takes a lot longer to build up. Like the ETFs, those are well over 40 odd pounds a share, might be hundreds of pounds a share, I can't remember now. Anyway, yeah. So obviously legal in general, it's not too bad. I can build that up. Aviva again, that's not too bad. HSBC, I'm looking to build that up. As I say, I think that's about £14 odd. BT, that was going back donkey's years when it was offered in the 80s, like the gas and everything, when it was offered as shares, and I never got any then. In fact, all these are all since, where are we, January 26, February 2026 onwards, and I'm building them all up. Anyway, I'm rambling on, but if you compare the two screens on the left for last week and the two images rather on the, sorry, the two images on the right are last week's and the two images on the left are this week's. So if you compare last week's to this week's, you can see obviously pretty much most have done a little bit good or pretty good. And I think I saw one when I was looking earlier, one or two that are just down a bit. And we're always going to experience that. Some are going to go down. In fact, the stock market at the moment, I would say, is riding pretty high. And I'm no analyst and I'm not making any predictions. And I'm not saying this is going to happen. But if the stock market dropped soon, it would not surprise me at all because it's riding high and has been. So we're in this bull market, isn't it? So it wouldn't surprise me if we don't see a downturn turn. Not hoping it happens, not saying it will happen, not trying to make it happen, but it's something we got to, as investment people, we've got to be aware can happen and does happen quite regularly. So yeah, so at the moment we're riding high, doing nicely, thank you very much. But if it should take a turn and go down, great time then, because we can buy a lot more shares for the same amount of money. So that doesn't worry me at all. In fact, shouldn't really say it, but in some ways, if it happens, great. We can take advantage of the lower prices. So yeah, so I'm generally building it up. I've put some into quite a few, a little bit into HSBC, definitely into M&G, BT I'll put some in, I'm pretty sure. National Grid I've bought some. I think NatWest I put a little bit in, and London Metric. I like the property companies. Don't know why I like them all, but I like the property. So London Metric and the iShares UK Property, I like those. And as part of my very first initial buying shares, which was the Terry Oyster Stocks Monthly, I put it into a pie, and the rest after I didn't. So that Terry Oyster Stocks Monthly is like a pie with 7 stocks and shares in, which are mainly things like Legal and General, and the other ones I've got. But there is another property, and I can't remember now what the name of that property company is in there. So I've got 3 property companies. I like property. As I say, it allows you to own property and get the rewards of owning property without the trouble of being a landlord and having to have people who are in your property who perhaps don't pay rent or are not good tenants. So that's why I like them. And got 3, so that's enough. Unless something really catches my eye, I can't think of any others I particularly want. In fact, I've been looking at different stocks and shares, and at the moment, I'm more consolidating what I'm holding at the moment rather than looking at getting others. Not saying I won't buy any other shares, but at the moment, I'm reasonably content with what we've got. We've got a good mixture, some good yields, good dividends, all what I consider pretty much to be blue chip companies. Nothing particularly explosive and exciting, but good solid companies that hopefully in 10, 20, 30 years will still be there, still increasing in value, still paying out good dividends. And that's the way I look at it. Pretty much solid, a little bit boring, but boring can be good. But that's why I try to put over some excitement. And there is excitement in watching them grow and watching the dividends come in. And I hope that excitement comes over. So yeah, so there we go. All you have to do is look on the screen. You can compare for yourself. Last week's on the right compared to this week's on the left. Look on my channel on YouTube and you can find previous weeks, even previous months, and hopefully soon, probably previous years, where I've done a weekly analysis. I don't go into too much depth. I don't go too much into figures. I just let you see what I've got, and then you can see and compare, you know, what I hold. I do a video on the dividends I get. So in there you can see the holdings I got in each ones as the dividends get paid. So you've got a complete picture, to be honest. So I hope you've enjoyed that. If you have, please subscribe, like and follow. Let's get the videos out. Let's spread the excitement. I always like to say this is a slow snowball. We started the end of January 2026, beginning of February 2026. We're moving along nicely. We're into August now, and that little snowball, each and every day, each and every week, each and every month, it's just getting a little bit more snow, building up another layer with the dividends being reinvested, with some investment from, you know, whatever capital I've got, just growing and growing and growing. So I hope you enjoyed, you know, the excitement as much as myself, and keep watching, keep spreading the excitement. And I look at this as a hobby. It's a hobby I do. I get loads of excitement out of it doing each and every day, and it pays me for doing it. Couldn't have a better situation. So thanks for watching. See you in the next video really soon.